gotta leave your money behind you. Raise your hand to the sky.
Welcome back to Give Me Some Truth International Edition, or as we've also called it, Dame la Verdad, or Dime la Vérité. We're talking about today the notion of expatriation. But I think in kind of addressing that, one of the interesting things is we have on our panel here, Sil, you have multiple citizenships, and so I was curious if you've ever thought about giving any of them up. And recently, much to I think Stan and I's chagrin, you added one. You became an American citizen as well.
That is correct.
So
I am now officially an American citizen.
Have you ever thought about giving any of them up?
Not really, and especially not the U.S. one, since I've been a citizen for 6 months. So not really. It hasn't really crossed my mind. I never really saw the upside in it, and I guess that kind of segues into what we're going to discuss today. Is I think it's not a benign decision, right? It's something that you need to consider very carefully, and for the most part, having additional passports and citizenships is a benefit, right?
Especially if you're an international man of mystery such as yourself.
Exactly,
yeah.
full time.
Yeah, full time. This is just a sidelight. International man of mystery is Sil's full time gig. But one of the interesting things is giving up your citizenship has different ramifications and benefits and advantages than it might if you're a U.S. citizen versus giving up French citizenship, Swiss citizenship, et cetera, German citizenship, especially if you're living outside of the U.S. because, the unique thing about that U.S. citizenship is it follows you everywhere in the world that you go. And so in response, actually, in the 1990s, there was a glut, you might say, of people giving up their citizenships to avoid various taxes in the United States. One of the famous ones was a couple of prominent members of the Getty family. And so the U.S. passed a whole series of laws, Stan, to kind of put in tax implications to the notion of expatriation.
Sure. I would also say that one of the more famous expatriations in recent time would be that of soon-to-be former Prime Minister of Great Britain, Boris Johnson.
Yeah. Boris had to give up his U.S. citizenship because he had a U.S. apartment, right, that he sold and made a whole bunch of money on, or was it a London apartment?
It was his London flat, and he did not realize until the IRS contacted him that he was on the hook for gains above the $250,000 U.S. dollar exemption, because the UK doesn't have an exemption. They have an absolute exemption on the gains from the sale of your primary residence.
And so old Boris had to give it up.
So Boris went through the process somehow. It would be interesting to see the records on that and verifying that he's a covered expat, which is a concept that we can go into a little bit.
Was Boris born in the U.S.?
Boris was born in the USA.
So that's the interesting thing is, another unique aspect of being an American is, so obviously there's the tax aspect, the fact that taxes follow you around the world. But there's also this idea of accidental Americans. There are people out there who, may not even speak English, may, barely know, have never really lived in the U.S. for any extended period of time, but maybe they happen to have been born here. And, that makes you an American, right?
And another concept that we'll get into is that there are certain special rules for these accidental Americans, which I'm sure Boris availed himself of. So interesting case to kind of anecdotally discuss some of these topics, actually.
Yeah, but, Boris wasn't the reason that put in the place the rules. He just got trapped by them in some sense, right? And that's, I think, if you look at people who want to give up citizenship, it's because they are feeling hemmed in by these rules. And, we talk every day about how U.S. taxation affects you. It's not just the paying of the taxes, but it's also restrictions on certain things. For instance, what investments you can hold outside of the United States, because those then have tax ramifications. If you're a U.S. citizen, it gets harder to open up a bank account. All of these sorts of things.
It gets harder to become a significant shareholder in a foreign corporation. It gets significantly more complicated should you want to move your portfolio to your country of residence or to anywhere outside of the United States and participate in pooled investments, mutual funds, hedge funds, and the like in your local investment economy, if you will.
So we can look at the various cases, right, or the types of people who are looking to expatriate. There's the accidental American case, but what we may want to just start off with is I'm a regular old American. I've now been living somewhere outside of the United States for 25 years. Or also, one way this affects people that we've seen in the past is you lived in the United States as a foreign national and you want to give up your green card. That's the other place where this can come into play, but the rules are slightly different. So if you have questions about that, you may want to reach out to us directly.
Let's be clear that there are three types of situations. There's the accidental American. There's the American that's gone native elsewhere and wants to relinquish citizenship. That person, by the way, people of that ilk tend to be less, that it's single-digit thousands per year that expatriate, right? It's a relatively small number compared to the millions of expats out there in the world. Then there is the largest group of people that need to go through the expatriation process, and that's long-term green card holders, right? Long-term residents of the United States, and that's a much larger cohort of people who actually then need to go through this process to relinquish tax residency in the United States.
Mm-hmm. And so let's just take the example to start off with. I have settled. I have just got back from Germany and Italy, and if I were going to settle in one of those two places, I would say I would settle on the shores of Lake Como. And that opens up, sort of two categories of Americans, right? I could be living in a nice little, studio apartment up high above Lake Como.
Yes.
Or I could be the sort of rich American George Clooney who buys a villa.
Would you be a bachelor, or would you be married to a non-U.S. person in this scenario?
Well, let's start with me as a bachelor, and we can add in married to a non-U.S. person from there.
Okay. Great.
So, what do I have to worry about if I am a bachelor living high up in the mountains? Not a high net worth individual, we might say. What do I have to worry about, and how do I classify myself as a non-high net worth individual? And I think the technical term would be non-covered, right?
Right. Yes. Okay. So, a preliminary threshold question that anybody contemplating expatriation needs to understand and needs to assess is whether or not they're going to be considered a covered expat if they go through the tax process of Form 8854, which is the form that you file in the year that you are going to expatriate. Okay, so this is a really important threshold, okay, for a couple of reasons. One is if you are a covered expat, you are going to be expected to then pay an exit tax. There's a price for freedom of renouncing your citizenship. And the second thing that you need to consider if you're a covered expat is that if you have loved ones that are going to remain U.S. citizens, any future gift or bequest to a U.S. citizen from a covered expat will be immediately taxed at the maximum gift and estate tax rate without the exemption that you enjoy as a citizen, obviously, at 40%. So it's a big, big deal.
And so what qualifies you as a covered expat?
Okay, so you need to, there's a three-part test, okay? If you fail any of these three criteria, you are a covered expat. Okay, so the first one is the tax rate, or shall we say tax liability threshold, right? The IRS will look back over the 5 prior years to the year you filed the 8854. They'll look at your 1040, and they'll average out how much tax you owed those years, right? So this amount adjusts each year for inflation, but if you had what they would consider a high tax liability, which last year was $171,000, it's probably $173,000 or $174,000 this year. It tends to go up $2,000 or $3,000 a year.
So if I paid over $170,000, give or
Yes.
take, in taxes, not
Yes,
if I made more
in
than
federal taxes.
Not-
We don't count state taxes, and please don't confuse this with adjusted gross income, right? I mean,
Yeah. This
so-
is how much, if I had to stroke a check to the IRS, my check would be greater than $170,000 US dollars.
Yeah. So I mean, for all practical purposes, we're looking at people who earn well over $500,000 a year on average over that 5-year period, right? Given a max tax rate of 29%, it would be
39.
39. Sorry.
And it's lower than that now, 37.6, I think.
Yeah. I mean, so we're talking about high earners,
Yep.
right? Big income people. Although I guess technically, I mean theoretically, like if you cashed out a ton of stock in a given year, maybe you sold your company or something, you might have some lumpy something that throws that 5-year average
Right.
well off and triggers this, right? So I don't want to just tag this to salary, right? Income is from all sources, and tax liability, obviously capital gains rates and ordinary income tax rates differ, but if you get to that tax liability amount that your 5-year average, and if you did have one of those lumpy high earning or high realization years, you might want to just assess and say, well, okay, and if I wait 1 year, 2 year, 3 year, is this going to? Am I now not going to check that box, right?
And you should be aware as well, these provisions also, you can't, you have to be careful if you're going to have a high tax event after you expatriate, right? You can't.
Sure.
You can't just hide some income and then expatriate and drop a huge company sale, right?
Well, I mean, like the timing of that. Let's get on to category number 2.
Okay, yeah,
and that's
yeah.
gonna kind of like I see where you're going with that. Okay, so the second part of the test is simply net worth, right? Considered high net worth. You're considered high net worth under the expatriation rules here in this country if your net worth is at least $2 million. So stay under $2 million and you don't tick the box, and you may not be a covered expat, but $2 million net worth. And this, obviously is going to be something that, frankly, I think is easier to trigger than the first box, right?
Yeah.
I mean, because you're talking about, you're talking about your home, you're talking about your retirement, the value of your pensions, right? Even if you have a defined benefit pension that isn't going to pay out until way in the future, and you have no liquidity per se, right? It's still present value calculation. They're going to add that to your net worth. All right. So, if you're a couple, by the way, that is expatriating together, right? A married couple. Think about how your assets are titled, and think about who owns what, and you may need to make some adjustments in front of this, right? Because you need to both. It's not $2 million per couple, obviously. You both need to try to get under that threshold.
And you each have $2 million exemption.
So it is an
Right.
individual threshold.
And this amount, by the way, does not adjust for inflation, right?
Mm-hmm.
So I think is pretty significant. It's been $2 million since the rules came out. What was it, 6, 7, 8 years ago?
More than that, went into effect in 2004.
Right. Oh God, this is a
COVID
testament
time.
to my age, right?
Yeah.
My God. So I mean, think about that. That was a lot of money then, but Congress isn't there's no provision to adjust for inflation here, so it's remained at $2 million. So that could be a real challenge for anyone of means to pull this trigger without triggering the covered expat consequences of expatriation. Okay, and the third prong of this test, remember, fail any of them and you are a covered expat, is shall we consider this the compliance or certification test? The taxpayer has to, on the 8854, certify that he or she has met the requirements of U.S. tax law for the 5 preceding tax years, or fails to submit submit evidence of that compliance to the IRS. So the IRS is, the IRS is basically saying, look, you're on notice right now. You're going to need, on the threat of perjury, to certify that your taxes over the previous 5 years are clean. And you can very much expect that the IRS, the probabilities of the IRS looking over these with a finer tooth comb, of course, are elevated, right, to make sure that is in fact the case.
So I'm either a covered expat and I have to worry about all of these things, or I'm a non-covered expat. And if I'm a non-covered expat, then my renunciation of my citizenship is fairly more straightforward, we might say.
Yeah, you'll file the 8854 that provides all of this information about your assets and makes that certification. You'll file a regular 1040, like a partial year 1040 for the year up until that date, right? And then you'll file a 1040 NR for the remainder of that year.
So there's still a process to go through, but the key is that you won't be expected, if you're not covered, you won't be expected to pay an exit tax. And also some of the gift tax problems won't apply to you in terms of subsequently gifting money to a U.S. resident. So it's much more beneficial, basically.
Yeah, I mean, absolutely. So we should probably talk about the exceptions to the rule as well, right? We talked about BJ, Boris Johnson, for just a minute, right? He's. I'm just going to go out on a limb and suggest that he was probably, as mayor of London at the time, worth, in an Oxford man, right? We're going to just guess that he was worth more than $2 million US at the time of expatriation. So is he covered? Well, there are two main, I guess maybe we could consider exceptions to being a covered expat, even if you were to meet those 3 criteria. One is that, the accidental American, right? You gain citizenship of another country at birth. Okay, so it's not that you immigrated there and then got your passport and now you're expatriated. Okay, you were born a citizen of another country. You currently live and you're currently a citizen of that foreign country, and you continue to pay taxes in that country and are a resident of that country, and you were in the U.S. for under 10 years of the 15 tax year period ending with the tax year in which you file for expatriation, right?
Okay.
So you can't so if you're born in France, hypothetically still, and you move to the U.S., acquire citizenship change your mind in year 9 of the U.S. residency, right, and go back to France and then file for expatriation, you're going to meet this exception, right? But if you've been in the U.S. for over 10 years, you're going to need to go back to France, continue to pay U.S. taxes, and wait at least 5 years, so that 10-year in the previous 15 residency in the United States no longer applies. Then if you expatriate, you are going to be exempted from covered expat status, okay? This is primarily, intended for those accidental Americans, but, it could also be an immigration thing where you decide then to return to your country of birth, and or your country that you were a citizenship, you had rights of citizenship by birth, right? And then you relinquish it. The other exception is something that, like, I think, is one that's, like, talked about by people, like, because they vaguely think that there's some right when you turn 18 to decide if you're a dual national, right? That you basically have some ability to decide whether you're going to keep your U.S. citizenship, right? It's a little more complicated than that, because you need to expatriate before you're 18 and a half. That 8854 has to go in before the day you turn 18 and a half. So there's a definitive deadline, and you cannot, and then that 10 years or less of U.S. residency is also required. It's not 10 of the last 15 years. It's your lifetime. You were a resident of the U.S. for less than 10 years. You're going to turn 18 and a half. You get to decide whether or not to turn in that passport, right? So the most common people it's going to apply to, I would call the when you've got dual national families that are really entrenched in their residence country, their kids were born in the U.S. or they weren't, right? But either way, they technically hold that U.S. passport, right? But they live abroad with their family. They have a decision to make. They're not going to necessarily, pay the price of the decision that their parents made, in terms of citizenship, and they get a chance to expatriate in a less costly way than their parents may have at this point, right? Which seems
pretty fair,
very fair. I mean,
and so
more fair than most of this sounds.
And I think we've covered quite a bit here today. Syl, is there anything else that you wanted to add, just kind of on the covered, non-covered? Because I think there's enough material here that we may want to do. I think it makes sense to talk a little bit about the ongoing implications, some more of the exceptions. I'm thinking specifically with regards to gifts and estate planning and so on and so forth, because I think that could be another, we could, end up here with a 50-minute podcast. So Syl, I just wanted to see any other sort of thoughts you had on this covered, non-covered, No,
I think we covered most of it. And so I think just to maybe summarize at a very high level, someone wanting to expatriate, there are really two scenarios. One would be being a covered expat, and the other one would be non-covered. Stan went over the different criteria that determine whether or not you are a covered expat. And in general, the outcome is a lot more benign if you are not covered.
Yeah, let's leave them wanting more. Let's talk about how benign that is very briefly.
Okay.
Right? If, dun, 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 you are a covered expatriate. We talked about gifts and stuff, or like what you leave after you're dead. But you're dead, right? So you don't feel the tax paying quite as much. So let's talk about that exit tax just very briefly. Okay. The consequence is essentially that the exit tax, the IRS looks at your estate as if they look at all of your assets as if you died, right? So they're assessing, everything that's in your U.S. estate as if you own it, and then, boom, they assume that you sold it the day before you expatriate, okay? And that's a valuation date, and you will essentially have taken a full distribution of all of your retirement accounts. You will have essentially sold everything that you own, so that whatever unrealized gains, it's forced realization of those gains.
So let's stop there. So we're going to talk more about those consequences because there's a lot more to delve into there.
Sure.
But essentially, yeah, they treat it as if on the date of expatriation, everything is for sale. And so we'll talk more about what that means in detail. But we want to thank you for joining us. If you're interested in this topic, feel free to reach out. As we're doing another podcast on this topic, if you listen and you have questions, feel free to send us an email at info@walknercondon.com and pose those questions, because on the next podcast, we'll be able to address those a little bit as well. So thanks for joining us today. And hopefully, if you're interested, you'll join us again in about a week or two when we go more into the consequences of being a covered expatriate, both in terms of what you're going to owe in taxes and what the longer term effects are as well.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit walknercondon.com.